Level 1. The Beginner. $100. You open the app for the first time at 11 p.m. because you saw a video that said everyone should be investing and you felt behind. You have $100. You don't know what a ticker symbol is. You don't know the difference between a stock and an ETF. You type in a company name because you recognize the logo and you buy $100 worth of it without reading a single filing. You watch the price for the next hour. It moves 4 cents. You refresh again. It moves 4 cents back. You feel like you're gambling and winning and losing at the same time, except nothing has actually happened yet. You tell a friend you're an investor now. They ask what you bought. You say the name of the company like it means something. It doesn't. Not yet. You have no strategy. You have no plan for what happens if it drops 20%. You just have $100 and a feeling that you're finally doing something with your money instead of watching it sit in a savings account earning nothing. That feeling is the whole reason anyone starts. Level 2. The Retail Trader. $1,000. You've been at this for a few months now. You've added money from your paycheck a little at a time until you crossed $1,000. You've started reading things. Not filings yet, but articles, forum posts, threads where strangers argue about whether a stock is going up or down tomorrow. You check your portfolio every morning before you get out of bed. You check it during meetings at work. Phone under the table. You've learned the vocabulary: bull market, bear market, support level, resistance level. You don't fully understand what any of it means, but you use the words anyway because using them makes you feel like you belong. You make your first real mistake here. You buy a stock because it's going up fast, and everyone online is talking about it. You buy near the top. 3 days later, it's down 30%, and you're staring at a loss that represents 2 weeks of your paycheck. Your stomach drops every time you open the app. You don't sell. You tell yourself you're in it for the long term. But the truth is, you're just scared to lock in the loss. You're learning the first real lesson of investing, and it has nothing to do with charts. Fear makes bad decisions feel like patience. Level 3. The Serious Investor. $10,000. Something shifts around here. The losses taught you something the gains never could. You start reading actual annual reports, or at least the parts you can understand. You learn what a P/E ratio is and why it matters. You learn the difference between revenue and profit, and you're embarrassed it took this long to understand something so basic. You open a spreadsheet for the first time and start tracking your positions properly, not just glancing at a phone screen, but actually writing down why you bought each thing. You start separating your money into buckets, some for long-term holds you believe in for years, some for a little speculation, because you still enjoy the thrill and you're honest enough to admit it. You read about diversification and realize half your portfolio is sitting in 2 companies in the same industry. You spend a weekend rebalancing. It feels tedious and unglamorous, nothing like the version of investing you see online, but it's the first time your portfolio actually looks like a plan instead of a collection of impulses. Your family starts asking you for stock tips at dinner. You give vague answers, because you're starting to understand how little you actually know, and that realization is more valuable than any tip you could give them. Level 4. The Portfolio Builder. $50,000. You've been contributing consistently for a couple of years now. Some of it is market growth. Some of it is discipline, putting money in every single month, whether the market is up or the market is terrifying. You open a statement one day and the number says $50,000, and you sit with that for a minute, because it's more money than you've ever had in one place in your life. You start thinking in percentages instead of dollars, because dollar amounts stopped meaning much once the number got big enough. A 2% move is $1,000 now. You feel that in your chest more than you expected to. You go through your first real correction at this level, a stretch where the market drops 15% over a few brutal weeks, and every financial channel is using the word crisis. You watch $7,500 disappear from your account in a month. You don't sleep well for a few nights. But you don't sell. And this time, it's not fear keeping you frozen. It's conviction. Because you've actually done the research and you understand what you own. The market recovers 8 months later. You didn't time the bottom. Nobody does. You just stayed. You start reading about asset allocation, about bonds and international exposure, and how much risk actually makes sense for your age and your goals instead of your ego. Level 5. The Six-Figure Investor. 6 figures. You say the word to yourself a few times because it still feels unreal. This is the level where compounding starts doing real work for the first time. You notice your portfolio can move more in a good week than you contribute in a month, and that realization changes how you think about time. You stop checking the app every morning. Not because you don't care anymore, but because you've learned that daily movement is mostly noise, and the only signal that matters shows up over years, not days. You open a retirement account if you haven't already, and you start maxing it out, chasing the tax advantage as hard as you once chased hot stocks. You read your first full 10K cover to cover, footnotes included, and you fall asleep twice doing it, but you finish it. And you understand a company in a way you never did before. Your friends start treating you differently when money comes up. Some ask for advice, some get quiet, a little competitive, a little unsure how to feel about your progress next to theirs. You keep your mouth mostly shut about numbers. You've learned that talking about money changes how people see you, and not always for the better. Level 6. The $250,000 mark. The growth compounds faster now, and it plays tricks on your sense of scale. A single bad day in the market can cost you more than your first 3 years of contributions combined. You feel that the first time it happens, a red day that wipes out $9,000 before lunch, and you have to remind yourself that the number is theoretical until you actually sell. You start thinking seriously about taxes for the first time, tax loss harvesting, the difference between short-term and long-term capital gains, the cost of trading too much. You realize that some of your early excitement, the constant buying and selling, has quietly cost you real money in taxes and fees you never accounted for. You slow down. You let winners run longer than your instincts want to. You start reading about the investors who actually built fortunes this way, and you notice a pattern. None of them talk about excitement. They talk about patience like it's a competitive advantage, because it is, and almost nobody has it. Level 7. The $500,000 investor. $500,000 sitting in accounts with your name on them. You think back to the version of you who put in $100 and didn't know what a ticker symbol was, and it feels like a different person, almost a different life. You've been through at least one real bear market by now, a stretch where the market fell 25% or more and stayed down for the better part of a year. You watched the number on your screen lose 6 figures in value, and you kept contributing anyway, kept buying while everyone around you was selling and swearing off the market for good. That decision, made in the middle of genuine fear, turns out to be the most important one you'll ever make, though you won't know it for a few more years. You start mentoring people now, a younger cousin, a coworker just starting out. You give them the advice nobody gave you early enough. Time in the market beats timing the market. You say it so often it starts to sound like a cliché even to you, but you've lived it, and you know it's true. Level 8. The millionaire. 7 figures. The number that used to represent an entire fantasy now sits in your account, built dollar by dollar, decision by decision, over more years than you like to admit. There's no confetti, no one throws you a party. You check the balance one ordinary Tuesday morning, and there it is. And you feel something quieter than triumph, more like relief. You've earned the right to stop obsessing over every position. You think in decades now, not quarters. You've survived at least 2 crashes and a handful of corrections, and each one taught you a little more about your own temperament than any book ever could. You start thinking about what the money is actually for, not just accumulation for its own sake, but freedom, options, the ability to say no to things that don't matter. You run the numbers on what it would take to be financially independent and realize you're closer than you thought, which is both thrilling and a little disorienting. You still work, you still show up, but something in you has already started planning an exit, even if it's still years away. Level 9. The multi-millionaire. $5 million. The growth from here is almost entirely the market's doing, not your contributions. You could stop adding money completely, and the compounding alone would carry you forward at a pace your early years never could. That's the strange magic of this level. The machine you built runs mostly on its own now. You diversify more seriously, real estate, maybe a small stake in private investments, because concentration risk means something different when the number is this large. You hire someone to help with taxes and estate planning, because the mistakes get expensive enough here that doing it yourself stops making sense. Market drops still hurt. A 10% correction is $500,000 on paper, and that number still makes your stomach tighten even though you know, intellectually, that you've survived worse. But you've built enough of a track record with yourself to trust the process even when it's uncomfortable. You've stopped asking whether the market will crash again. You know it will. You've just stopped being afraid of what that means for you specifically. Level 10. Financial Independence. $10 million. $10 million. You think back sometimes to the $100 that started this. The app you opened at 11 p.m. because you felt behind. The stock you bought because you recognized the logo. You had no idea what you were walking into. Nobody ever does. The number now is large enough that it generates more in a strong year than most people earn from a lifetime of work. But the number was never really the point, not anymore. The point was what you became along the way. Patient where you used to be impulsive. Calm where you used to panic. Someone who reads a filing before believing a headline. You could stop working entirely if you wanted to. Some days you think about it seriously. Other days you realize the investing itself became part of who you are. Not a means to an end, but a discipline you actually enjoy practicing. The same way someone enjoys training even after they've already won. You still watch the market open every morning. You still read the reports. Not because you need to anymore, but because somewhere along the way, understanding how money actually grows became one of the few things that still makes you feel sharp, still makes you feel like you're paying attention to something real. Somewhere right now, a 22-year-old is opening an investing app for the first time, staring at $100 they're nervous to risk, wondering if any of this is even worth learning. They have no idea what a PE ratio is. They have no idea what compounding actually means until they've lived through a decade of it. They're going to make every mistake this script just walked through. They're going to panic sell something they shouldn't have. They're going to hold something too long out of pride. And if they keep going anyway, if they keep showing up and contributing and learning long after it stops feeling exciting, they'll wake up one day and not recognize the number on the screen. That's the whole game. Not genius, not timing, just staying in it long enough to let time do what it always does.